Today we're doing something a little different. We're reacting to CoffeeZilla's day trading while you'll almost certainly fail. If you day trade at all and you've told other people, odds are you've been told it's like gambling or everybody loses in the long run, blah, blah, blah. So I'm actually interested to hear his takes because he's a very big channel, and let's see if I can debunk any or if he's actually spitting facts.
Me with my index fund, according to the data, not according to anecdote, according to data, hard data, I'm outperforming 99% of day traders.
That's an L point actually, but we'll just get to that when it comes because it said coming up.
What is poppin' snake gang?
Today I want to tell you guys about why you will almost certainly fail at day trading. Now, I made a video yesterday where I
A little harsh there, bro.
kind of memed on some day traders, made fun of them.
Literally 2:15 in the afternoon right now. Haven't even eaten nothing all day, man. Trader lifestyle is really difficult.
But it surprised me how many of you came back to me and said, oh, no, guru such and such is legit. No, my guru is legit. And I think there's a fundamental disconnect here because as I understand it, day trading is a game that you will almost...
It's not a game, it's a business, to be honest. People who treat it like a game will usually lose, though.
Certainly lose. And it's clear to me that a lot of you guys don't believe that, and maybe that's because of all the marketing that's been going on with these gurus. So I want to set the record straight. Just for a second, set aside your favorite Forex trader, your favorite day trader, because they're trying to sell you something. Let's be honest. They're trying to sell you something. They have incentive
Not me.
Not to tell you the honest truth about day trading. And maybe even they will tell you, oh yeah, a lot of people lose, but here's why you won't. They'll give some reason.
I will say, so the people who spend all their videos and all their content like flashing profits, trying to like obviously sell some vision that their followers or their subscribers are going to get that same result, that is shady. However, the people like me and many others on this app who actually teach a strategy and a model that their viewers then test and confirm works, that's different, right? Because that's actual value. You're teaching something. But I agree with him to the point that like a lot of the marketing that's all flashy, watches, cars, I'll never do that. I don't care how much money I make. I'm always going to focus on the education. So I do agree. A lot of scammy gurus that focus too much on the material side of it in this industry. However, that doesn't really correlate to the average person being able to win or not day trading.
For why you're special or why they're special and how they're going to suddenly make you successful, even though the majority of people fail. Most people kind of know that. But let's go over the actual numbers, because I think getting familiar with the actual statistics helps people make better informed decisions. I did this with Amazon FBA when Amazon FBA was all huge. I did a video showing that only 8% of third-party Amazon sellers make even a fry cook's income, guys. Like, wow. Not a lot of money, just a fry cook's income. Only 8% of
not really what I clicked the video for, but that's honestly wild.
Third-party Amazon sellers will ever hit those numbers. So in this video, I want to do something similar and just show you how difficult day trading is. And I know a lot of day trading is about that excitement, the hustle, the day trader life. But I think if you get a good grasp of the numbers, if you understand the numbers, you won't be so convinced.
So he's probably just going to give some stats, and we'll let him talk, obviously, that are going to point to low success rates in day trading, which I think is just kind of a loser mentality, right? Of course, not everyone's going to succeed. Not everyone's going to make it work. But since when do like winning mindsets, winning people let the odds being kind of stacked against them push them away from doing something that they know they could succeed with, right? I mean, look at this guy. He's got what? 4.5 million on YouTube. So what were the odds of him actually growing that much? Well, obviously he put the work in, right? He executed, but the odds before he started were really low because not many people do that. So he could have just never started YouTube because he wasn't likely to succeed, right? It was a waste of his time, his money to invest all this into his content because he wasn't supposed to succeed, right? It's like the same thing. You could do it with sports, musical artists, like anyone who makes it big or anyone who at least makes it good enough to where they're comfortable, the odds might not have been high. Winners actually don't let that stop them. So this kind of a loser mentality.
Hoping those of you who are kind of mathematically savvy will really pay attention to this video and understand the studies, the statistics behind all this, because you guys can't escape the reality of statistics. So before we get into these studies, because we're going to go over two important scientific papers about day trading, I first want to say To those of you who are going to say, oh yeah, of course the majority of day traders fail, the majority of YouTubers fail, the majority of anything fails.
Wrong.
Proved over and over again.
Wrong.
The problem with that is that investing is one of those rare kind of domains where you can get all the advantages of investing with basically no effort using something called an index fund, which is what I use, and it's a passive investment tool where you just put money in, you set it, you forget it. And over time, index funds have consistently outperformed almost every other super flashy investment tool. So you can, with basically no knowledge or effort, get the vast majority out of the stock market. You know, you might not be making as much as Warren Buffett a year, but you don't have to do anything. You're not spending your life on finances. Whereas, as we will find, the majority of day traders who are spending their life looking at a screen trying to, chart the...
Okay, so he's basically saying that you can compare trading to things like YouTube, etc., where the success rates are low, but the difference with day trading is that you can get the benefits of the stock market without actually putting in the effort by buying index funds. Now, yes, you can. That's investing, though. That's not income. Majority of people are investing money for their IRAs, right? They can't touch that for 20, 30, 40 years. Well, with trading, it can be active income if you get good enough to consistently get payouts on a prop firm and stuff like that. The other thing, obviously, is that if your strategy is profitable at all net of fees and you are trading on prop firms, right, and not with your actual live capital, it doesn't matter if you're underperforming the benchmark from a return percentage basis because you're trading with borrowed money anyway. It's a prop firm. So for most of my viewers that trade futures, understand that, a lot of people are going to say, well, why would you day trade? You can just match the market and buy SPY or buy QQQ, right? You can buy S&P, NASDAQ in your IRA, and you can beat the market or match the market, whatever. And with day trading, you're barely beating the market or you're underperforming it and you're spending time doing it. Well, like I said, with a prop firm, that issue's gone because you can underperform the market and it still be worth your time on a prop firm because your live capital isn't actually being put to use in the same way. Yeah, you're paying for combines. Yeah, you're paying activation fees, but we all know it's not the same as having your own live money tied up. So this guy clearly doesn't understand prop firms, right? That's the first thing I would point out. The second thing is that, yes, you should invest. And this is not me being a financial advisor. I just think it's common sense. You should invest. You should have an IRA, all that stuff. Why not both? If you day trade successfully through prop firms, right, with not even your own money, and you don't need to worry about beating the market, you can also do something that investing in the S&P in your IRA can't do for you, which is generate tangible income weekly or monthly, right? Now, of course, trading has its fluctuations. Maybe you'll have a red month and you won't get payouts. Maybe you'll have a really green month and you'll get 4. Doesn't matter. The trading has the potential, at least, to make you active income in a way that investing does not. So he's wrong on that. Now, I do agree that the market, you can get a lot of benefits from it by doing nothing, and everyone should be. I trade and invest.
Data, they're not even outperforming an index fund. So myself and maybe you, if you decide to invest in index funds or whatever you decide to invest in, you can basically be doing nothing and outperforming a vast majority of these day traders who are flashing the Lambo and whatever. You're making more with your index fund. So let's go over the numbers. I want to show you guys in the data.
Once again, it's just less correlated than he's making it seem.
Let's jump in. So the first paper we're going to be looking at is Day Trading for a Living, where they do a brief summary of the literature on day trading, and they explain the following. Study after study has proven that the majority of day traders don't even make a profit. They lose money day trading. Check this out.
Many do,
this paper found that only 36% of day traders profit. Another study found...
Wait, of 324, so that's a small sample size. A lot more than 324 traders, I would say. Okay, this is 25, 30 years ago.
That 25% of all retail day traders profit. Another study finds that only 19% of day traders profit.
These are all like very old samples, by the way. Prop firms are newer, so I wonder if the prop firm stat has skewed anything.
So most people,
the prop firm's existence has skewed anything.
Losing money. That's already a given, right? But how many people are actually making more money than you would with an index fund? Because I'm going to assume for a second that you guys don't want to waste your time day trading if you're not making more than an index fund holder like me, right? So with that in mind, let's turn our attention from not just who can profit at all, but who can profit more than an index fund, right? Who can make more money than you would if you just set your money and kind of forgot it? Well, this is where we go to another study called the cross-section of speculator skill. This study looked at day traders in Taiwan from 1992 to 2000.
What are these like very random locations, random markets, and like very old pieces of data, right? This is 2 decades ago on the back end of this study size.
And here's what they found. Less than 1% of day traders are able to predictably and reliably earn positive, abnormal returns net of fees. So after you
Okay, well, first of all, you should always strive to be in the top 1%. I don't know why anybody wouldn't. And second of all, this is once again just a really old study.
pay your fees, 1%, actually less than that, less than 1% is able to earn an above average return. Do you understand how crazy that is? So me, with my index fund, I'm just sitting here, right? No matter what the gurus say, they can say that they're special all they want. Me with my index fund, according to the data, not according to anecdote, according to data, hard data, I'm outperforming 99% of day traders. Now, part of that
Bro's outperforming 99% of day traders in Taiwan from 1992 to 2006, but he has zero clue about the rest of the day traders in existence.
Is because of the fees, but part of that is for another reason, because this is looking at what's called retail traders. And retail traders are people like me and you who are just handling our own money. We're not working for a bank. Now we need to consider institutional traders, because when you're trading, right, you're trading across the table from somebody. And more often than not, that person might be an institutional investor. In other words, a bank. And this is where we go back to our next study. Once again, it's day trading for a living. And what's interesting about this study is they say, hey, we think that actually the fact that there are more hedge funds than ever, the fact that institutional investing has gotten bigger than ever, the banks are a bigger and bigger percentage of the total shares traded every day, that fact puts retail traders at a disadvantage, because now it's not just Joe Blow on the internet versus Joe Blow on the internet, you know, Adam versus Adam. Now it's Adam versus gigantic hedge funds supported by quants, right? It's Adam against Renaissance Technologies, one of the few hedge funds which consistently has outperformed the stock market, who, fun fact, 1/3 of their employees have a PhD in like math, computer science, or physics. That's who you're trading against sometimes. And so what this study looks at,
You're also trading against a lot of incompetent traders, to be fair.
that is, look, given that hedge funds are bigger than ever, what's happening to the retail day trader, right? The guy who's trading all the time against these people. Are the numbers for day traders actually getting worse? And yes, they are. Because according to this study, which looked at the Brazilian futures market, this study found that only
The Brazilian futures market? Bro, what?
3%.
Could he not have found something at least based in like the US futures markets, like ES, NQ, S&P, NASDAQ? Like, I honestly feel like one of those would have made this so much more valid. So far, he's brought up like Taiwan 25, 30 years ago. He's bringing up Brazil now. At least talk about the most traded and liquid market of all.
Of day
right?
traders were profitable after 1 year. Guys, that is insane. In other words, 97% of them lost money. And this paper is really clear about who they're trying to convince with the findings. They say this, check this out, quote, "It is now very easy for anyone to enroll in one of the many online courses about
Taking jabs at course sellers is kind of funny in a scientific paper, I can't lie.
day trading, or to join live trade rooms in YouTube where traders teach retail investors how to trade in real time. We show that it is virtually impossible for an individual to day trade for a living, contrary to what brokerage specialists and course providers often claim." Snake gang, that is it. Snake gang, that's all you need to know. Period. That totally.
So 97% and virtually impossible are different, right? 3% success rate versus virtually impossible. Big difference to me. So he brought up a lot of, well, not a lot. Actually, he cherry picked a few sources that kind of established really low success rates among really small sample sizes in kind of obscure markets. So I would have liked to see a lot bigger sample sizes in terms of success and failure, and some topics about recent data out of US markets, right? ES, SPY, QQQ, 2020 and forward, right? I would really like to see that, because with the rise in prop firms, I actually have seen a lot of people be able to reliably make money in the market. Now, prop firms require a different type of skill set than managing your own money because of the drawdowns, because of the rules. They're stricter. It also gives you more freedom to take heavier risk, right? Like, we all understand these things. But I would really like to see, with the rise in popularity of prop firms, obviously they're making a lot of money off the bottom percentile traders who continue to blow combines, right? But like the top percentile, from what I've seen, there's more room to succeed. It's less of like a 1% chance, and maybe more like the top 10% are raking money in. And the prop firms publicize this, right? Like, they publicize the largest payouts they give every day, everything along those lines. So I just don't think he hit the nail on the head with this one the way he clearly thinks he did, because he didn't mention prop firms once. And that alone kind of puts a wrench in his entire argument about you should use your money to just invest passively and not put it to work in the markets, because you're not going to beat the market anyway. But with the prop firm, you don't need to be beating the market because it's not actually your money. So as long as you're returning positive net of fees, if you deem it worth your time and you can scale up effectively, then it's worth your time.
Nails it. Virtually impossible for an individual to day trade for a living, contrary to what brokerage specialists and course providers often claim. And one of my favorite parts about this study is not only do they call out course providers in a scientific paper, but also they say, okay, look, even of the people, the 3% of people who are consistently at least going positive, how much are they going positive, right? How much are they profiting? Is it even possible for the people who are profitable to be profitable enough to be a millionaire or to make all this money, flashy lifestyle, Lambo, whatever? Well, this is where it gets interesting. And it reminds me a lot of our Amazon study, because check this out. In order to make a minimum wage day trading, you have to be in the top 2.7% of day traders. Let me repeat that. 2.7% of day traders, top 2.7, in order to make a minimum wage. This is worse than Amazon FBA, at least.
Did he discuss the sample size of these people? I know this was the Korean futures market some time ago.
Amazon FBA had 8% of them make.
Was this the Brazilian one? I don't know. He's brought up a Korean one, a Taiwanese one, a Brazilian one, no American ones.
Making a fry cook's income. So, I mean, like, now Bezos is looking great compared to day trading. But in order to make the profits of a bank teller, what a bank teller makes, you have to be in the top 0.6% of day traders. Now, guys, let's be honest. If you're looking up YouTube videos about day trading, you're not in the 0.6% of day traders. Let's just be real. And let's also be real about the fact that you can enhance your.
That's crazy. All right. The first thing is this is definitely skewed. You do not need to be in the top 0.6% to make a bank teller's income.
Wealth by having a real job.
In this specific study and small sample size, though, obviously that could be the case.
And just investing in an index fund. So I hope you can enhance your wealth by having a real job and just investing in.
4.5 million on YouTube. Doesn't seem like a real job to me. It seems like being self-employed, being an entrepreneur, and being a winner. And yet you're here telling people to get a real job? Yeah, I don't know, man.
An index fund. So I hope this really clears up a lot of the confusion about day trading. You know, there's obviously a lot of hype around this industry. Even now, scientific papers are calling out course sellers for their fraudulent claims.
That's crazy.
But guys, at the end of the day, you guys have to look at the data, not at the hype. You have to look at the math, not at the madness. So I hope this has helped you get.
Once again, he just didn't give enough context. He gave really cherry-picked pieces, really small sample sizes in markets that my viewers are really not even concerned with. So, yeah.
A better picture of, is day trading right for you? I would go out on a limb and say that it's not right for almost everyone. Most people are better cut out for just passive investing. But whatever you guys think, I want to hear about it in the comment section below. I know not everyone's going to agree with this video, but I want you guys to tell me why you agree or disagree. Which part of it do you agree with? Do you think that there's some guru that still has a magical power with investing? Or do you think that these economists are right, that with the rise of hedge funds, it's now harder than ever to beat the stock market consistently, and that honestly, you're better off just grabbing an index fund? Let me know in the comments below, and of course, I will see you guys next time. As always.
Don't forget to smash like and subscribe. Thank you.
All right. So yeah, no hate. I mean, at all. Obviously, he tried to make some pretty good points, I think. And I just don't like the way he went about it. I think the flaws in this video are his comparison with you can get all the benefits from the market without trading. Well, the benefits of trading and investing are completely different, in my opinion, especially if you're using prop firms. So I think he's off on that one. He also doesn't mention prop firms once, which kind of debunks the need to be beating the market or the need to even be matching it, right? Because at the point with prop firms, you're not using your own money, which also debunks the you can't invest if you're spending all your time trading your money. Well, if you're trading prop firms and you're doing it effectively and getting even decent payouts, you can still invest your extra money, keep some capital on the side to keep buying combines, and keep trading, right? As long as you're profitable net of fees, you don't need to be beating the S&P's return percentage-wise. The other obvious elephant in the room here, which I've already kind of harped on, the sources he chooses are very cherry-picked. He has 3 sources covering a total sample size of probably like 1,000 people. All 3 sources are over 10 years old, and they all concern markets that are not as liquid or traded as the markets that we're used to trading. Now, that part might not matter as much, but it's more about the sample size and the datedness. So, yeah, if you're day trading and you find that it's not working for you, it's really a skill issue, and you just have to get better at managing your emotions and finding a strategy, right? I've been there. I'm still not where I want to be, not even close, but I've improved a lot. And the only way I was able to improve from where I was at rock bottom was by using discipline and using my STIM model, right? Which I teach on this YouTube channel, okay? And once again, it isn't for everybody. That is very true. A lot of people in my shoes would have quit years ago, right? So there has to be a level of inner tenacity to actually make it work, because it's not going to work as fast as you want it to. It never will. So I guess in that perspective, he might be right. But that's another thing, right? Like if you're still here, if you're still trading, if you're still watching this, you're ahead of probably 50 to 60% of these, 97% of traders that fail, because a lot of them fail because they quit after a little bit of time. I would also like to see, like, to be considered a day trader in these studies, how many trades do you have to take, right? Could you buy a few shares of something and sell it the next week and be logged as a day trader by these brokerages or by these companies? Like, is that going to mark you as a day trader? Say you lost $100 on that purchase and it's your only short-term trade ever. Is that going to put you in that 99% of losers, right? Like that, we don't know that stuff. So that's why I think a lot of these stats are kind of unquantifiable, because there's not enough rigorous tracking of it by all the brokerages combined and all the sources combined to actually give us good answers. So as far as I know, it's worth doing it if you've seen improvement, if you actually care to succeed, and if you know that with discipline, you can make your system work, right? That's what I've got to say. If you're still watching, make sure to like and sub. I'll catch you guys in the next one. Peace.